there, Sean Kevelighan. We have another executive exchange for you today. I have the opportunity to sit down here with Anil Vasagiri. He is the Senior Vice President at Swiss Re for Property Solutions. Anil, welcome.
Thanks, Sean. I appreciate you having me on your show today.
Yeah, it's great because we're going to talk about a topic that comes up a lot in insurance: flood. In fact, over 90% of all natural catastrophes involve flood one way or another. So we've heard that the FEMA, the Emergency Management Service with the federal government, has recently updated their flood maps. But from what we understand, it's not just those flood maps that insurers use. And maybe you can talk a little bit, Anil, about all the multiple sources and why it takes multiple sources to really get at the flood risk.
So flood is a very complex peril. And if you start digging into the impact of a flood, right? So the amounts are staggering, especially if you look at the protection gap every year. And this is not just limited to a community. It's almost universal. It's global. Now, the unique nature of flood, you really, in order to understand and model it, it really comes down to two critical ingredients, right? So one is data, other is having enough compute power to actually run your analysis and things like that. Now, over the last several years, with the advent of cloud computing and such, now organizations technically have unlimited compute to throw at this problem and really get into it in greater detail. But what is always been a limiting factor is understanding of the terrain, understanding of the data. And that's where, having data from multiple sources, more accurate data, is going to be super critical in order for us to better understand as well as, take the necessary actions, right? So that sort of is the fundamental. Now, multiple sources of data ultimately, I hope that it would translate to more accurate understanding of information at any given location, and this helps, of course, insurers assess risks better, right? So it all comes down to understanding the specific constraints or terrain and all of that. But it's not just limited to understanding the risk in the current context. It also allows insurers to help their insured in building resilience and sort of implementing things to address future flooding risks. Last but not least, it also allows community as a whole and also the risk transfer ecosystem to better understand the climate driven impacts of around this peril. And overall, I think having more accurate data sort of advances our information on all of those three dimensions.
Yeah, it's in large part this data that you're talking about is the reason why 65, 70 years ago, the industry actually couldn't be in the flood insurance business, and we had to establish a government program behind it. You all, Swiss Re, have recently acquired Fathom out of the UK, and they specialize in water-related risks. You talk a little bit about that and how that may impact your flood underwriting and Swiss Re's involvement more in flood insurance?
Yeah, no, absolutely. And you sort of described it well, right? So increase in information leads to increase in capacity. And so that is what you saw play out in the private flood market, right? Back in the day, it was, there was only one possible, source of insurance, especially when it came to flood peril. Now you see advances both on the compute and data that allows private flood market to grow and thrive. And Swiss Re has been a player in that space. And as you know, our recent acquisition, we're quite excited about it for multiple reasons, right? So first of all, when you think about it in the insurance context, underwriters need more accurate, more comprehensive data in order for them to be better informed and draw more advanced risk insights. And this allows them to price the risk better. And then in addition to other stuff that they do, whether it's on the policy terms and what have you, and that's really very critical, right? So you need improved better data to be able to get to that next level of risk insights. Now, we are really excited about Fathom acquisition because it allows us to combine the best of what Fathom has to offer with our own capabilities. And you may have seen the recent announcement where we've integrated Fathom's US data, high resolution US data, into our CatNet platform, which is our online global hazard catalog. And this allows our clients, insurance companies, to access some really high resolution, sophisticated information at a click of a button, and consume it, to sort of understand and build that sort of insight into their decision making. And that's really what we are really excited about. And that's just first of the many things we hope to accomplish in this partnership with Fathom.
Well, it's interesting because I think that's really where I think the rubber is meeting the road, if you will, on risk management and understanding of risk is when you can take the data and then you visualize it, because that visualization is really what allows a broader audience to also understand it. And something we're trying to encourage more of, quite honestly, at Triple I, because if you see the risk and it helps you understand the risks, then you're gonna want to get at the cause a little bit more. And that's really at Triple I where we're seeing a shift in the industry from detecting and repairing on catastrophes to predicting and preventing. And I do think this data and the visualization, this is all part of it. But maybe you can talk a little bit about, the resilience side of flood, because in many ways, what we say is this is a kind of collective responsibility that requires people to understand the risk and change behaviors. And maybe you could talk a little bit about that data and some of the future adaptations that you're going to see with the Fathom acquisition and other things that Swiss Re is doing.
Yeah, no, absolutely, and you've described it well, right? So this information, this enhanced insights, it cannot and it should not be limited to just risk transfer, because it has a broader purpose, which is really around building community resilience, right? And that resilience can be around enhancing or fortifying the existing built environment, or shaping a future built environment in such a way that it is less vulnerable to perhaps some of these perils. And it could be in the form of land use restrictions and urban planning and things like that, right? So ultimately, I think you're absolutely right. So the notion of using this data to not just inform us in terms of how we go about pricing a given risk, but also helping shape our future behaviors, and in bringing into consideration not just the today's scenario or near term, but the longer term impact of climate change on all of the the severity and frequency of these flooding events. Those are all insights that come into play, and that is really where we at Swiss Re feel that it gives us an opportunity to sort of be part of this conversation, drive and shape this dialogue going forward. Now there are, as far as remediation and or mitigation goes, we've kind of touched on fortification aspects, right? But I think it also brings into bear considerations around where we build and where we future cities or future assets, and how best we think about it in the context of exposing these assets to potential perils. I think those are all aspects that this enhanced information would really help us take into consideration and drive that decisioning, and hopefully we see those advances shape out in the coming days.
Really interesting stuff. So this is the part where you get to ask me a question. So what do you got?
Yeah, no, thanks, Sean. I think it's fascinating, right? So when it comes to flood, Swiss Re, we have a view, and we're kind of working on improving that information transparency and making models better, and sort of drive that increased risk insights. But I'm sure there is a lot of other things happening outside, and from your vantage point, what are some of the changes you see in the industry that you're excited about, and what are some of the lessons that we could potentially draw on or sort of piggyback off from those insights?
Well, I think honestly, one of the most exciting things for me is as we're moving more and more to get private industry into the flood insurance market, and we are seeing that increase. In fact, just reading a report from the Dowling Partners that the private flood insurance market is up about 9% year over year, with about $1.4 billion in direct premium written. From my perspective, the more that we can get private in, that means the less that the government is going to be in the insurance business. That's not really an ideal role for government, in large part because anytime you have government involved in something, it's going to get political. And for many years, I think risk-based pricing in the flood insurance program was a political game, and still is to some degree. But we're seeing some progress where we have a risk rating 2.0 there. That's rating things a little bit more, not completely, as according to the risks. The price of the risk is a reflection of the cause. We've talked a lot today about flood insurance, or I'm sorry, flood being a major cause of catastrophes for people, and making sure that we're better prepared. Insurance is that first critical step towards resilience. Then we got a whole lot of other stuff that we need to do, and we need government to be involved in that. I'd rather them be involved in the physical infrastructure protection part of this rather than the insurance business, because we got a lot of work to do on infrastructure so that we can adapt ourselves, change those behaviors, and honestly, write the risk at a better price if we can get to the cause, reduce the risk. But that's going to take some time. But I am encouraged about just the pace of which we're beginning to see private industry enter into the flood insurance market. And when insurance gets involved in a market, they tend to take a lot of steps to make sure we're reducing the risk. We've seen it in highway safety. We see it in building safety. So if we're getting more private industry interest in it, maybe we'll also get a little bit more pressure from that industry to reduce that major risk that we're seeing in flood. Now, this is not just a U.S. problem. It's obviously worldwide, and Swiss Re being a global company, always impressive how much you all really lean into the resilience matters and help inform discussions and change that behavior that we're talking about. So, Anil, it's just been a pleasure to have you here. We always enjoy working with a member company that's so involved like Swiss Re. So thank you for your time today. And thank you all for joining another Executive Exchange. We'll see you next time.
Thanks, Sean.